There were three banks, including Citi, and their results were pretty strong.
Yeah, about as strong as you can get. They were up some 34%, and yet the warnings were across the board about the Fed, about bad loans, about the war that's going on. Wells Fargo, Citi, and JPMorgan saw combined profit rise to $22.5 billion, but despite those windfall profits, they wrote off nearly $4 billion in bad loans, and that is roughly double the amount of charge-offs that they recorded a year ago. Now, JPMorgan CEO Jamie Dimon was out front sounding the alarm, saying this is, quote, the most dangerous time for the world in decades, and citing caution is needed given the wars, the soaring debt, and the Fed. Quote, while we hope for the best, we're preparing the firm for a broad range of outcomes. Now, while JP Morgan posted another quarter of record net interest income and joined Wells Fargo in lifting its full-year forecast for such revenue, Citi's rate and currency traders had their best third quarter in at least 8 years, driving firm-wide revenue past analyst expectations. But we had Citigroup also giving more details on its most aggressive restructuring in 2 decades. And all the bank executives spent Friday fuming about the new capital requirements imposed by regulators. We knew they would have strong views about this. They did not disappoint. This is really going to be a burden on the banks. And so that was a big topic of conversation on the earnings call.
Sue, there's a lot going on, but give us a preview of what we're expecting this week.
Well, we've got the big ones, Goldman, Morgan Stanley, and Bank of America. And so they're following in the heels of this strong profit. They are likely to report strong results, but with differences. Goldman expected to wrap up its unwinding of different units related to that ill-fated expansion into retail banking. Bloomberg is reporting they've been selling off different units, such as GreenSky, related to that. Deal making still expected to be less than the best. We know that the current macro environment has really put a chill on deals for all of the major investment banks. Morgan Stanley has tilted toward wealth and asset management under CEO James Gorman, and Bloomberg Intelligence expects this to support their third quarter results. Bank of America, meanwhile, is the bank with its stock most under pressure, down roughly 20% year to date. Analysts say the impact of higher rates will show up in its results. It's expected to report a profit of 83 cents a share. That's up 2.5% from the same period a year ago. Growth, but not much, compared to JP Morgan and Wells Fargo, which saw magnitudes of that. Again, a bit of red on the screen. Last trade on Friday. We'll see how they report this week.